Welcome to RealCast, the weekly roundup of the real asset markets. My name is Richard Betts, and I'm joined by Nicol Dynes, Dan Innes and Giles Barry. And we'll have a special focus on Iberia. But let's start with the roundup of the week. Giles, what have you been following this week?
Richard, I think it's all been about retail, really. We had predictions at the beginning of the week that retail landlords would bring in about 10 or 15% of their rent at the quarter day, which was earlier in the week. It's looking like it's as bad as that. It's what happens when the government pulls the rugs from landlords and doesn't allow them the leverage to get rent in. You know, lo and behold, retailers that are struggling anyway have the whip hand and don't pay their rent. I think it's outrageous because those retail assets are owned by you and I in our pension funds and the companies that pension funds invest in. I think we'll feel the impact of that for years to come.
Dan, what have you been following this week?
Well, as Giles said, it has been a lot to do with retail. Arguably one of the biggest stories of the week was Intu preparing for its administration. Friday was that deadline for agreeing a standstill, on its current loan agreements. And in a statement on Friday morning, Intu said that there had been insufficient alignment and agreement. And I think it was around midday when technically they did go in to appoint administrators. That's reported to be KPMG. Their debts are now £4.5 billion, and the pandemic and subsequent lockdown really hasn't helped Intu. And as Giles says, the rent payments has also really sort of hamstrung that. But in the first quarter of the year, it only collected 40% of charges from tenants. This rent collection issue, it was a hot topic, particularly last week because of that quarter day. And it's reported that really 18.2% of commercial rents in the UK were collected. 18.2%. It really beggars belief. And as Giles says, it really is shocking. And that's a further drop from 25.3% 3 months before. And the lowest collection perhaps came from retail, and that was down to 13.8%, which is, again, a huge factor for everybody concerned. Roger Wade stepped into the debate having a chat with City AM earlier in the week, talking about his concerns about the pub, bar and restaurant sector. They're being given a chance to reopen on July the 4th. That's the next kind of retail leisure date in our diaries. And he's worried that after lockdown, landlords are just going to be asking for rents that tenants just can't afford to make. On a brighter note, Cineworld, the world's largest cinema chain, they've agreed a 250 million secured debt facility from private institutional investors and further sort of strengthening their balance sheet. This follows on an agreed increase of 110 million of its revolving credit facility and covenant waivers. All of which is going to really help it recover from COVID after closing all 787 of its cinemas. In March, Cineworld kind of warned it might collapse if the pandemic was to wipe out 2 or 3 months' revenue, which is pretty shocking as well. And they're due to sort of reopen on July the 10th. And of course, they're debating issues around wearing masks, and they're trying to follow guidance from the UK Cinema Association, which they prepared with the Department for Digital, Culture, Media and Sport. And my last piece is on the European side with AEW, and they're one of the world's largest estate investment managers, and they've acquired a mixed-use asset in Cologne through a forward funding agreement with development partner AG. That's a bit of a construction project on Haus am Rudolfplatz and could be nearly 9,000 square metres of retail and office space by architect Max Dudler. So AEW's head of investment was very buoyant, talking about that in the press last week as well.
That Intu story is one that we've been following for a long time here on RealCast. And I noticed also that Eurofund Group, Intu's minority partner in its Costa del Sol retail and leisure side, has made a bid to buy out the UK REIT's share of the Spanish project. And that may be something worth following as well. Nicol, we were also looking at Iberia this week. What was your sense of some of the things that we picked up from the briefing?
Well, there seem to be two things. One, definitely short-term pain, valuations, sharp fall in values expected this year, and a lot of distress to come. But obviously, investors can look at the other side of the coin and see opportunities, and retail Intu has shopping centres in Spain as well as the UK. Retail is an obvious sector that will see a lot of distress but could offer opportunities for investors. There seem to be we did 2 polls among delegates at the briefing, and there seems to be a belief that it's a sort of longer term gain. 85% of respondents believe there will be opportunities in distress in the next 12 to 18 months. But 67% of market experts believe the valuations will not return to December 2019 levels until December 2021. So it's a sort of fairly long game that investors will have to play.
Yeah, it was interesting also there that residential, logistics were two of the things that came out strongly. But also Christina from Azora mentioning that she did see as a kind of longer term, medium term, that hotels and leisure would come back strongly as well. Interesting, I also saw that distressed side, Pedro Coelhos of Square Asset Management, saying that he was expecting that to come through more like in 12 to 18 months, which picked up something that Emma Hopeful from CBRE Global Investors had said in our earlier debt and investment briefing, that we would begin to see this kind of distress come through later on as a result of the economic crisis. There was a sense of growing optimism, just in terms of the poll that looked at how they felt in comparison to March. 40% of people felt more optimistic, 38% felt the same, and only 20% felt less optimistic. And sustainability was also something that came out quite strongly during that discussion. And Giles, I think there was also some things from British Land this week in terms of sustainability side.
Yeah, I think it's really interesting. They published their annual report on Tuesday with a raft of really bold new goals. I think going further than any other big REIT. They promised that their whole portfolio will be net zero carbon by 2030. They're prioritising retrofit over new build. There's a whole raft of society-based promises around inclusion and working with local communities to a greater extent than ever before. I think we can't get away from the fact that ESG has just gone a bit quiet for the moment because of coronavirus. It will continue to be a really, really big issue, not least because investors in the likes of REITs are very, very interested in it. And that was really interesting to see from BL, which has a big portfolio and a first-class portfolio, but is still going the extra mile to make it fit for purpose.
Yeah, that's interesting. I also saw, picking up some of the other trends that I've been seeing on LinkedIn, Olivier Elamine from Alstria, obviously one of the bigger office REITs, just saying that the main issue with WeWork reflect into the wider office business. It's not that WeWork needs to cut costs, it's that it's been selling its services below their real production cost. While space as a service, an increasing service to the tenants is at the forefront of many PropTech discussions, the industry shies away from the key question, which is who's going to pay for these additional services. Were there any other kind of things that people wanted to pick up?
I think just going back to where we started, Richard, you can tell I feel strongly about how landlords are being treated because it's for our collective good. I think the big issue isn't around retailers who are struggling and who've been shut. It's what I call the can pay, won't pay types. The retailers that have been open have been trading pretty well and maybe owned by private equity or giant institutions, just deciding that they won't pay because of the times we're in, and I think that goes to the very, very fundamentals of real estate. Are you contracted or not? It's a really, really big question for the industry as we go forward.
Great. Thanks very much, Giles. Thanks, Nicole. Thanks, Dan. Thank you for joining us and look forward to seeing you next week for our roundup of the key themes in real assets. And next week, we'll take a look at senior living. Thank you.